Welcome to today's online lecture. In today's lecture, we are going to study the final two topics of Chapter 4, Tax on Commercial and Industrial Activity. In the previous lectures, we have studied the conditions for applying the tax and then determining the profit of commercial and industrial activity, taxable commercial and industrial activities, taxable revenues, profit from long-term contracts, deductible costs, and today's inshallah we are going to study losses carried forward and finally tax exemptions. For losses carried forward, according to Article 29 of the law, stipulates that if the final account of a year is closed in a loss, the loss shall be deducted from the succeeding year's profit. If, however, part of the loss remains, it shall be carried forward to the succeeding years up to the fifth, after which no loss can be carried forward. The following must be considered to benefit from carrying forward losses. The losses should pertain to the entire year, not a particular sort or portion of the loss. The loss carried forward is the tax loss, not the accounting loss. If a company incurs losses for more than 1 year, the oldest loss is carried forward first. The benefit of carrying forward losses is related to taxpayer himself, meaning that the only beneficiary of the deduction is the taxpayers. If taxpayer discontinues the activity in which he incurred loss, carrying forward the losses will cease until the taxpayer resumes practicing the same or a similar activity within the specified term for carrying forward losses. Establishment new owner doesn't benefit from the right to carry over the loss related to the prior owner. And finally, taxpayer heirs don't inherit the privilege to carry forward losses. Final topic is about tax exemptions. Article 20 and 31 of the law addressed revenues exempt from taxation despite the availability of criteria to be taxed to achieve economic or social objectives. Such exemption will be outlined as follows. Article 20 stipulates that the tax shall not apply to profits from the re-evaluation of the assets of a sole proprietorship when providing this is an in-kind share to the capital of a joint stock company, providing that the shares corresponding to the in-kind share are nominal and shall not be disposed of within 5 years. Exemptions stipulated in Article 31. Exemption is stipulated in Article 31. According to this article, tax exemption for revenues from commercial and industrial activity can be divided into 2 categories. The first category is specific exemptions. It's a set of exemptions related to the profits of a certain enterprises, and the law defines these exemptions as follows. Land reclamation or cultivation enterprises. A legislator exempted the profits of these establishments from tax for 10 years from the date of activity inceptions, according to the first clause of Article 31 of the law. As one of the state's economic objectives, this exemption aims to expand the agriculture area by reclaiming unproductive lands or cultivating them to boost the agriculture sector contribution to the gross domestic product. Poultry farming enterprises. The profit of these enterprises have been exempted from taxation for 10 years from the date of activity inception under the provisions of the second clause of Article 31 of the law. Due to the significance of ensuring food security through poultry production, the legislator seeks to encourage investment in these projects. Agriculture enterprises. The legislator exempted the profit of such enterprises from being taxed for 10 years from the date of activity inception in accordance with the second clause of Article 31 of the law. This is maybe due to the demand for these businesses stemming from the significance of bee honey as a food product. Livestock husbandry and fatting enterprises. Under the provision of the second clause of Article 31 of the law, the legislator exempted this project profit from taxation for 10 years from the date of activity inception. This is intended to stimulate investment in such businesses to cut meat imports and conserve foreign currency. Fishers, fish farm enterprises, and the fishing boats enterprises. Following the first paragraph of Article 31 of the law, the legislator exempted these enterprises' profit from taxation for 10 years from date of activity inception in recognition of the significance of fish as a food product. New project funded by the Social Fund for Development. The final clause of Article 31 of the law provides for the exemption of profit realized from new project established with funding from the Social Fund for Development within the limit of the ratio of this financing to the invested capital and with a maximum equivalent to 50% of the annual profit and not exceeding £50,000 for 5 years from the date of activity inception or commencing production, as the case may be. This is provided that proper accounting records be maintained. The condition for this exemption can be summarized as follows. It shall be within the limits of the ratio of this financing to the invested capital up to a maximum equivalent to 50% of the annual profit and not exceeding £50,000. This exemption is granted for 5 years from the activity or production commencement, as the case may be. Maintaining proper accounting records. In this context, Article 42 of the Executive Regulation adds the following condition to benefit from the exemption provided for the profit of new projects funded with funding from the Social Fund for Development. The date of practicing the activity be after the date of obtaining funding from the Social Fund for Development. Project profit shall only result from commercial and industrial activity. Establishment must be a sole proprietorship. The second category of exemptions under Article 31 are special exemptions. They are related to certain revenues, and the law defines these exemptions as follows. Deposit and saving accounts. Under Clause 5 of Article 31 of the law, the tax legislator provided for exempting the interest which physical or natural persons receives from the following. Deposit and saving accounts in banks registered in the Arab Republic of Egypt. Investment, saving, and deposit certificate issued by said banks. Deposit and saving accounts in post office funds. And finally, securities and deposit certificates issued by the central bank. Thank you for watching, and this is the final topic on chapter 4. See you soon, inshallah, in chapter 5 about non-commercial and professional activity.